Good afternoon, and welcome to our new Zoom cast, Real Life, Real Estate, and Real Money, where we speak with you and not over you. I'm Jacinta Parsons, your show moderator, and your show hosts are industry professionals Lekan Parsons, licensed real estate agent with Solid Source Realty, and Doug Moran, licensed mortgage broker of Moran Financial Group. Each show, there will be 3 brief segments. First, we focus on real life. Real estate is the focus of our second segment, and we finish up with our focus on real money. Throughout each segment, we encourage you, our dear audience members, to send us your questions and comments via the chat box, and we will address them at the end of the show. We will always have a special guest to offer the real life segment of the show. And today we are happy to have with us Anthony Thomas, aka Maxx, a computer analyst and renowned drummer with George Parliament and the Funkadelics. And now, Maxx, welcome to the show.
Greetings. I'm not quite sure if my camera is working, but this is Anthony Maxx, alias Anthony Thomas, a new member of the Parsons Power Team. Hopefully this meeting finds everybody doing just wonderful. As far as real life, my journey has been what it's been up to this point, and I'm now adding real estate to my tool chest. 30 plus years as a computer systems analyst, 50 years as a musician. I've had the opportunity to play on several different stages over the world with several different pseudo-renowned artists. I guess we can call them, we're not pseudo-renowned, but renowned artists, as well as Mr. Parsons, Lekan, fabulous keyboard player, vocalist, band leader. And at this phase of the game, I just find myself positively privileged to surround myself with certain relationships that can continue to positively impact my life and the lives of others. And at this point in time, the real estate, just the information itself, fits so perfectly into the grand scheme of things as to how systems work. What is real is what I've always been focused on from different philosophical perspectives. Now, from a more tangible, down-to-earth perspective, what is real estate. And in relation to that reality, we have the greatest prosperity possible. Malcolm X said, if no land is involved, then your revolution is futile. If you want to do something, if you want to do anything of any meaningful nature, it has to involve tangible assets, land, gold, silver, minerals, blah, blah, blah. Just would like to say hello and grateful, very grateful to be on the team and the company of such kings and queens. Just peace and power.
Thank you so much to Maxx for sharing and joining in with us today. And as I mentioned earlier, please keep those questions and comments coming in via the chat box. We can address them during our Q&A at the end of the show. Next up, for our real estate segment, we have Lekan Parsons of Parsons Power Team, a professional in the real estate industry for 16 years, licensed with Solid Source Realty. Welcome, Lekan.
Thank you, Jacinta, and thank you, Anthony. It's always a joy of knowing such wonderful people, and there's always a joy in serving people. And I think, as Jacinta mentioned here today, that we are not here, Doug, myself, and our featured guests on the live portion. We're not here to talk over you. We're here to talk and speak with you, right? That's really, really important with this. It's not about talking about me and what I've done. It's really about how can we serve you as professionals, and how can we make it like really simple and really palatable and so that you can comprehend. Doug and I have these conversations often that sometimes we feel the working class people, there may be some things that go over us because people are constantly talking these technical words and they sound fancy and they're very impressive, but it's like, what is that doing for me? So, here we are with real life, real estate, real money. We're in some very interesting times right now. I talk with my clients, and Jacinta and I, we work with tons of people. The market has changed, and everyone has their head kind of on a swivel, trying to figure out what is going on. Is my real estate agent trying to upsell me, if we would say, in other words, trying to make me spend more money for the home? Why doesn't my FHA, and Doug will speak about these FHA and these VA loans, why isn't it working? How come every time I put a bid in or an offer in on a house, it's not working? What is my agent doing wrong? Because we're coming out of this COVID scenario, pandemic, if you will, and the housing prices has skyrocketed, and lumber prices has skyrocketed, and everybody's like, oh my gosh, and there are people that have been in forbearance, and I'm sure everyone is wondering. I haven't paid my mortgage or my rent, right, in over a year. And then we say that maybe there are investors on the side waiting. There's going to be tons of foreclosures, and I personally don't see the world that way. There's lots of things, and I always talk to my dear wife that we're all kind of looking through this looking glass and trying to figure it out. We're in a very peculiar situation. None of us have been here before, and we're all trying to prepare ourselves moving forward. So we're here. We just want to help you. I'm looking forward to your questions and making it very plain and clear for you to understand. So I appreciate you allowing Doug and myself and Maxx and Jacinta come out and share and speak with you. Thank you.
Thank you, Lekan. My better half, indeed. This is really such a timely and useful conversation and information, especially with things, variety of things going on in the world today. So we do encourage you, again, please keep those questions and comments coming in via the chat box. So last, but certainly not least, for our Real Money segment, we have Doug Moran, CEO of Moran Financial Group, and a licensed mortgage professional for 18 years. Welcome, Doug.
Thank you, Jacinta. And I am truly honored to be on here with both Lekan and our featured guest, Maxx. I am just a fan of real estate, and I've been in this industry for quite some time, and I love to help people, and that's what drives my passion in real estate. What I wanted to just go over with you quickly is qualifying to purchase a home in this current market. The qualifications, I approach this through the qualifications that we need to get from you to buy a home, and I've named this IPAC. IPAC is just an acronym I use to qualify clients when they come to me to purchase a home, when they want to get mortgage money to purchase a home. IPAC starts with the I, income. Okay, you have to have at least 2 years of verifiable income in the same source. I won't say the same field, because if you're a W-2 employee and you go from working as a, let's say, a teacher, and you go into computer information systems, we can still use W-2, but from the same source, meaning either W-2 or self-employed. The next thing is to really look at your assets. Look at property. That's the P in IPAC. Property is going to come into play is if you own property now and you're going to buy another, how is that going to impact the type of property you're trying to buy, whether it's a primary residence or an investment property, and how is that going to affect your what's called your debt to income ratio, which I'll go into a little further as I keep explaining. So The A in IPAC is assets. Okay. Assets are coming into play in probably one of the most important things, because we've got to have money for down payment. We've got to have money for closing costs, and we've got to have money for reserves. So those things are going to be vitally important to address up front so that you're prepared once we get in the process. Okay. And then the last thing in IPAC and the most important is credit. Credit is something you want to get ahead of immediately. We're going to review your credit for the credit score and then the body of your credit. In other words, what's been going on in your 2-year history. Now, here's a general rule. We need 2 years of income. 2 years of income verification through your W-2s or tax returns. We need 2 months of assets. And on your credit, we're going to be looking at 24 months, which is 2 years of events that have happened. Everything happens in twos. So when you're taking a look back, when you look at credit, let's look at the 24-month period and see where you are or what's happened and how we have to address it. Lekan mentioned something very important when he said a lot of people have been in forbearances. Well, here's a little tidbit. I'll leave you with this because it's so important. If you have a house now and you're looking to buy another, if you've been in forbearance and you've not made the payment, you have to come out of forbearance and make at least 3 payments in order to qualify. No one's going to know that, but that's what's written to the guidelines. My advice to you is to get with a knowledgeable mortgage professional who can assist you down that road of putting together your own puzzle of IPAC. Hey, I just want to say thanks a lot for having me on here today. This has been just a wonderful segment, and it's just a pleasure to be on here with Jacinta, Lekan, and Maxx, and I look forward to talking to you again in the future on our next podcast.
Thank you, Doug. That was wonderful. That's what it's all about, folks. Real life, real estate, and real money. And we definitely have some great questions that have come in, inspired by just a real sprinkling of initial information that we've gotten from our 2 show hosts and from Maxx. So let me start with the first one here that was offered, and I believe this would be best answered by you, Doug. What is the difference between an FHA loan and a VA loan?
Okay, great. That's a great question, and thanks for asking. Both of those loans are government loans. However, VA loans are through the Veterans Administration and are only for veterans or their veteran spouses. You have to have served in the military and have been released from the military in a positive manner in order to qualify for a VA loan. It's one of the best loans on the market because it is 100% financing, and it usually gives really great interest rates. Just a great tool for all our veterans. So it's really kind of a gift to the veterans. FHA is also a government loan, Federal Housing Administration. Both these loans, and I didn't mention on VA, but both these loans have one caveat. They have a form of mortgage insurance that is charged on the loan that insures the loan. And because it's insured, your qualifications to get the loan are much more loose, where your credit score can be a little lower. You're putting down a smaller amount of money on an FHA loan and 0 on VA. But they do charge what's called mortgage insurance on both of those loans. With VA, it's called a funding fee, and it's financed into the loan. With FHA, it's called a mortgage insurance premium that's financed into the loan, and then you have a monthly payment component as well.
Great. You guys are really helping to answer some questions. Again, speaking with us and not over us. We appreciate that. Next question. Why? Oh, very good question. Why are home prices so high right now? Lekan, definitely your arena.
Well, first of all, to be honest with you, there will always be 100 answers for that question. So I don't know, if I'm going to be very honest with you, if there is one correct and real answer that fits all. Let me say it like that. Right. So we're all kind of sitting here. Obviously, we've gone through this pandemic, right? And we've had these forbearances that's been holding on. The market needs to move. And all of a sudden we start seeing prices go up. I'm going to just say it like that, right? Lumber starts going up. People don't want to move. Appraisals are starting to go up. And all of a sudden you start seeing increases in the prices of homes, right? And I have clients that are saying like, wow, what's going on, right? Normally I could get out and negotiate. Doug may have done a FHA for someone, and we can come in with an FHA for maybe a home that was 220, which is now 270 or 280, and is not attractive anymore because we have a lot of cash buyers coming in, which is another reason that's pushing up the prices of homes. I will say, some people will say that, in particular here in Georgia, there are people that are moving here from New York because of the pandemic. They don't want to get stuck in those homes anymore. And they're coming down with retirement money, with hard, cold cash. And builders say, really? Price goes up. Sellers say, really? Price goes up. People are coming here from California. I'm out of there. I'm done with this pandemic again. And I just want my own square. If you say, I want my own space, I don't want to be around people. People say, great, price goes up. Price goes up. People are coming up here from Florida. Price goes up. And with that, the rent goes up. And then the prices of lumber goes up, and new construction goes up, and everything is going up. And we're like, are we going back to 2000 when we had the big bust and the bubble? So real estate agents, and I talk to Doug often. Doug, I can't get in with FHA and VA loans anymore, where that was like it was a home run, if you will, for a lot of our clients. And now I'm having to, we don't steer, we don't redline, but I'm having to suggest to a lot of our clients, you might want to consider new construction right now, because we have buyers that are coming in and knocking all of our local buyers out of the box. They're coming in, we have a VA loan, that can close in maybe 30 days. And it's 100% financing. And then, and we've got 240 on the house, and somebody comes with 250 cash, don't care if the home appraises, no finance contingency, no appraisal contingency. And sorry, Lekan, and the prices keep going up, and they keep going up, and they keep going up, right? So it's an interesting phenomenon. I've been talking to people who have been in the business longer than I have. 30 years. I'm 15, 30 years. They said they have never, ever, ever seen it like this, ever, right? So we're hoping that this thing levels off, because it can be funny. There's some people that thinking, and I know I'm straying a little bit, but I love to talk. I get very passionate about this, as Jacinta knows. They're anticipating. We haven't had people that haven't paid their loans in over a year. There's going to be massive foreclosures, millions and millions of people. And I'm saying to myself, really? So when we had the bust, people could still had a job. There wasn't a pandemic. Kids could still go to school. Now you're trying to tell me, and this is me looking through the looking glass. I'm a little guy from New York, right? I'm just thinking, so now you're going to say we're going to foreclose on millions of homes. People don't have a job. We don't know if the kids are going to go back to school, and they don't have any place to live. Interesting. I'm just going to say that. Interesting. Interesting phenomenon, Jacinta. Thank you for the question.
Thank you.
I'd like to actually add a little bit to that through some real life experience, because I think real life experience helps.
We're real here, Doug. We're real.
So I want to define something for everyone. One of the reasons you see things going up is we're experiencing inflation. Okay. And inflation in layman's terms is the cost of money has gone up. What that means is you're going to buy a home and use a mortgage. What does that mortgage cost? Whatever that interest rate is, right? So if in last year, I talked to Lekan many times and he'd say, man, what are interest rates? And I say 2.25. And he'd be like, wow. Well, now the interest rates are 2.875. The cost of money went from 2.25 to 2.875. That is part of the reasons you see things going up. So since the cost of money has gone up, right? Now you look, and I've had one experience with a builder who had someone under contract, and the builder said, well, cost of lumber went up too, right? So costs are going up in our society everywhere. Cost of lumber went up. Well, guess what? That drove the price of building a house up. Well, if the house is in a neighborhood where they got some older houses, well, guess what? It's driving the value up. And now everybody's saying, oh my God, I can get 30,000, 40,000 more. Now all of a sudden, everything costs 30 to 40,000 more. So just kind of I look at things as putting the puzzle together. When you see the cost of money going up and then you see prices going up, eventually you're going to have inflation, and that's what's driving prices up.
Wow. Very cool. Thank you.
Awesome.
Thank you, Doug. We definitely have a couple more questions that have come in. We got one coming in from Miss Latia, and her question is, and let's direct this to you, Doug. Is credit a major part of buying a home? And what is the first step in improving your credit? Excellent question.
Great questions, Latia, and thanks for asking. Credit is the major part in buying a home. You cannot move forward unless you qualify with your credit. So what I would tell you to do, the first step is to assess or have your credit assessed by a professional. Get with a loan officer as soon as possible so that you can start discussing your credit and you can start laying your roadmap or putting your puzzle together to move forward to qualify.
I'm going to jump in there too, Doug, behind. This is one thing I really love and admire in terms of working with Moran.
Thank you so much, Doug.
Absolutely. This is one of the things, Latia, that I really enjoy working with Doug. First of all, he answers my phone calls. Things can get tough. Sometimes it's not good news, right? Doug picks up that telephone and we go at it. We have had clients where it has taken a year to get the client credit worthy, okay? And we've had to undo and undig and rebury and unbury and push it through. And I would just tell my clients, the most important thing with Moran Financial Group and Doug, do everything that he tells you to do, number one. Number two, and this is getting real now, you have to tell the truth. You have to tell the truth.
Amen. Amen to that.
Okay. I told Doug, when we do this, I'm going to be real. Okay. When you're dealing in the banking and the finance industry, they peel the covers back. And I know sometimes folks like to say, this is my business, this is personal. You don't need to know about this. It's going to come out.
Yes,
and
we do.
It can destroy a deal. I tell my folks, when you're talking to Doug, if you're telling the truth, he will know which road to take you down to close the deal. Okay. And so I really appreciate that about you, Doug. You're focused and you have some great team members. I see we have one on with us today, and just awesome job. So that's important. Thank you.
Well, Lekan, I have about I keep them as mementos, but I have about 5 broken shovels because I'm gonna dig the hole deep until I find a way to go.
So very true. So very true. I do believe we have time for just one more question. And we have a question, let's see, from Ms. Pillpot. How often do the lending guidelines change?
Oh, that's a phenomenal question. Thank you, Ms. Philpott, for asking. It is a situation where guidelines change as needed according to the markets. For instance, we didn't have COVID before 2020. Well, they augmented the guidelines for COVID in the beginning of that year. And so they had a whole set of new guidelines they wrote to augment the old guidelines, and they were called COVID-19 guidelines, and they're still out here.
Wow.
They've loosened up those guidelines some as you see more people getting vaccinated, as you see things returning more to normal. They're dropping some of the COVID guidelines accordingly, but they're still here. So an example would be one lender used to go down to a 600 credit score on an FHA loan. Well, when COVID hit, 640, and we'll let you know when.
Wow.
And that's basically it. And so I actually, and this is a real life story, I had a client, two things happened. His wife lost her job because she worked in the hotel industry. Okay. And secondly, the credit score dropped. I had to work on the credit score. We got that back, but the wife didn't have a job. So the deal went all the way to this year. Well, the wife's income, when she did get a job, it was only 50% of what it was. So we had to wait a few months till she got to full time. When she got to full time, guess what happened? And this is a real life story. I just went through this. The seller, this is a resale property. The seller saw the prices going up, saw the market going up. The house, he was selling it for 160. It appraised at 176, but it could sell at that time. He could get a contract for 221.
Wow.
So this guy got pushed completely out and had to go look for a new property because the seller decided, I want the money. And one thing we didn't mention about why you see home prices going up, greed. And that's real deep.
Bottom line.
That's real deep. It's greed.
Keeping it real.
Yep. So mortgage guidelines can change on a regular basis according to whatever's happening in the market.
No deal.
Lenders will adjust to protect themselves.
Before Jacinta wraps up too, I have a question, and before my final question, I just want to let folks know we're going to be bringing on some of our clients with real stories, right? Real experiences, real journeys, because I think we have our clients speaking to you. It's kind of a heart-to-heart conversation, and you'll see some of those journeys. But before I conclude too, and Jacinta brings us home, I want to ask dear Maxx if he would unmute. I'm curious, why did you go system analyst and being a world-renowned drummer to now seeking your real estate license? Very, very curious about that, sir.
Thank you. I thought that I had a strategic contingency plan, us knowing how just the instability of being a musician is just so real that I said, okay, I'm gonna have a contingency plan. So I got my degree in computer science, and I actually relocated from C, where there's more stability for an African-American male financially, job-wise, and came here, which was more spiritually profound. Right now, I am officially retired, but spiritually, I'm still being inspired to push, and I'm grateful for that. Now I've got, I mean, you and I have been in each other's lives for the last 30 years, but now, as I do this real estate information, it's opening up so more of how the system works with wisdom, and my Social Security, my retirement is not enough. I'm doing real estate. First, I was thinking just a supplemental income, but now.
It's okay.
Like,
I think we lost.
We lost it.
Okay.
That also is real life.
That's real life.
That is real life. Well, anyway,
I think he's back.
That's okay.
Thank you to Maxx and Doug and Lekan for hosting us today. And of course, the biggest thanks go out to our dear audience members. Thank you all so much for joining us on this first episode of Real Life, Real Estate, and Real Money. Again, where we speak with you and not over you. Please do keep an eye out on your social media, email, and our private text app for announcements of our upcoming shows. And until then, remember, keep it real.
Take care, everyone.
Bye-bye.